Hi, Neal McLaughlin here for another episode of DIY Insurance Claims, your free resource for everything insurance claims related. Today I want to talk to you about a principle of insurance called good faith. As a large loss consultant, I travel around the country and outside the country on occasion to review losses. Sometimes I work for an insurance carrier, sometimes I work for contractors and the insured. Many times when I am out and reviewing a claim, I will find that the principle of utmost good faith is violated. It can be violated either by the carrier or the insured. Let me give you an example of what I mean by not living up to the principle of good faith or utmost good faith or acting in an abundance of good faith, which is what is expected of you when you enter into an insurance contract. If you have an insurance policy covering your home and you've stated to the insurance carrier that you've used the home as a residence and a residence only, and later they determine that in essence you used your home not only as a residence but also as a lab or as a mechanic shop that raise the potential of perils to have an effect on the property, well, then you have not acted in good faith. Consequently, the insurance carrier will not extend coverage in those cases, or will argue why they should not extend coverage. Conversely, if an insurance carrier has extended coverage, then they also have a duty to act in utmost good faith in handling the claim. They're not supposed to do things such as unreasonably create vexatious delay, deny a claim as they attempt to settle the claim. This puts an undue burden on the insured, and it's not acting in utmost good faith. Thank you very much for listening. This has been Neal McLaughlin for another episode of DIY Insurance Claims. Have a great day.